Donald Trump has just made one of the boldest and most controversial picks for his cabinet by choosing billionaire investor Scott Bessent as his Treasury Secretary, and the financial world is buzzing with speculation about what this means for the U.S. economy, global markets, and especially for everyday investors who are wondering how to position themselves for the next few years. And in this video we're going to break it all down in plain, simple language because let's be honest, this Treasury Secretary might sound boring, but this is the person who literally helps steer America's financial policy, deals with debt, manages the dollar, and influences interest rates, and Trump's decision to go with Bessent signals a big shift in strategy. Now for those who don't know, Scott Bessent isn't a politician. He's a Wall Street heavyweight who worked under legendary investor George Soros and ran Soros Fund Management for years before launching his own successful investment firm, Key Square Group, where he managed billions and proved he had the kind of sharp instincts and contrarian thinking that made him a star in the hedge fund world. And now Trump is basically saying, I want a Wall Street insider, not a Washington bureaucrat, running the Treasury. And that could have huge implications for everything from inflation to interest rates to the stock market. So let's break it down. First, Bessent's reputation is built on spotting macroeconomic trends before others do, meaning he looks at big global forces like currency shifts, oil prices, political instability, and central bank policies, and he makes investment bets accordingly. And having someone like that in charge of the Treasury could mean a much more market-driven approach to economic policy, something we haven't really seen before, because most Treasury secretaries come from government or academia, not hedge funds, and this brings up a huge question: will Bessent use his Wall Street playbook to try to strengthen the dollar, lower inflation, and keep U.S. markets competitive, or will he push for riskier moves that could shake up the global financial system? For investors like us, this appointment matters because the Treasury has its hands on so many levers that directly affect market conditions, bond yields, which doctor mortgage rates, stock valuations, and even crypto flows. And one of the first things people are asking is whether Bessent will take a harder stance on government spending, because remember, the U.S. debt is at record highs, and interest payments are ballooning, so having a hedge fund manager who's obsessed with numbers might mean big spending cuts, which could hit certain sectors like defense contractors or social programs, but also reassure bond markets and attract more global investors into U.S. Treasuries. Now, if he takes that path, we could see the dollar strengthen, which usually pressures gold, Bitcoin, and emerging markets but supports U.S. equities, especially companies that rely on cheap imports. But on the other hand, if Bessent pushes Trump's agenda of tax cuts and deregulation, we could be looking at a short-term market rally that benefits corporations and high-growth sectors like tech, energy, and infrastructure. So depending on which side he leans, the investment strategies could look very different. Here's the simplified version. If you believe Bessent will be the fiscal hawk, you'd want to load up on bonds, dividend-paying stocks, and companies that do well in a strong dollar environment. But if you believe he's going to be the growth-at-all-costs guy, you'd want to bet on equities, growth stocks, and maybe even real estate, since tax cuts can keep money flowing. But of course there's always the possibility he tries to balance both, which could make markets volatile but also create tons of trading opportunities. Another angle to consider is Bessent's view on globalization, because as someone who spent years analyzing global currencies and economies, he knows the dangers of overdependence on China or Europe, and he may push for a stronger U.S. industrial base, which fits Trump's America First philosophy. And if that happens, we could see big moves into manufacturing stocks, domestic energy, rare earth minerals, and even agriculture, while multinational corporations that depend heavily on China might face pressure. So investors need to watch trade policies very closely under his leadership. Crypto is another wildcard and has been outspoken about digital assets. But as a macro investor, he knows they're part of the global financial system now, and the Treasury under his watch could either crack down on crypto harder or try to regulate it in a way that actually gives institutions more confidence. and either move would be massive for Bitcoin and Ethereum investors, so keeping an eye on his early statements about blockchain will be critical. Gold and silver investors are also watching closely because if Bessent prioritizes a strong dollar, precious metals might dip. But if markets start fearing instability or geopolitical risk, safe havens could soar. And given Trump's unpredictable style, having a hedge fund manager running Treasury might make markets more jittery, which ironically could boost demand for gold as a hedge. What's fascinating is that Bessent isn't just another Wall Street billionaire. He's known for being deeply analytical, sometimes contrarian, and not afraid to take unpopular positions if he believes the data supports it. And that could make him a very different kind of Treasury Secretary, someone less focused on political optics and more focused on cold financial logic, which might appeal to investors but could spark political backlash. For example, if he pushes austerity measures to rein in debt, that might please bond markets but anger voters who see cuts to programs. And if he pushes too much stimulus, it could reignite inflation fears, so he'll be walking a tightrope, and markets will react to every speech, every policy leak, every hint of his thinking, which means traders will be on high alert, creating volatility but also opportunities. For long-term investors, the key takeaway is that Trump has picked someone who thinks like a hedge fund manager, meaning you should expect policy shifts to be analyzed through the lens of risk, return, and market impact. And that means being more nimble with your portfolio, diversifying into assets that can withstand volatility, and paying attention not just to what the Fed says but to what the Treasury does under Bessent. Another big point has relationships across global finance from his Soros days, and that means he knows how Europe, Asia, and emerging markets tick, so expect him to use that knowledge to try to keep the U.S. dollar dominant, which could come at the expense of weaker currencies, and if you're an international investor, this could affect where you park your money. In summary, Trump's choice of Scott Bessent as Treasury Secretary is like putting a Wall Street trader inside the cockpit of America's financial plane, and depending on whether you're bullish or bearish, this could either be the best thing that ever happened to investors or the start of a roller coaster ride where the markets swing wildly with every policy decision. But one thing's for sure, if you're serious about investing, you can't ignore this appointment, because it will shape the dollar, bonds, stocks, crypto, commodities, and even your mortgage rate in ways that could either build wealth or wipe out gains depending on how prepared you are. So stay informed, stay flexible, and get ready for a new era of market-driven Treasury policy where Scott Bessent is in the driver's seat and the world is along for the ride.